This is the APMEX Market Pulse podcast, your front row seat to expert discussions on precious metals. Welcome to the Market Pulse podcast. I am Brett Elliott with APMEX, and I have with me Marc Schwartz from the Monnaie de Paris. And we are going to be talking about gold, the dollar, and the global order. Marc, thank you so much for joining us today.
Hello, Brett. Thank you so much for having me here today. Very happy to that.
And Marc, before we begin, could I just ask you to tell us a little bit about yourself and about the Monnaie de Paris?
Well, Monnaie de Paris is a mint. It's a French national mint. It's based in Paris and Bordeaux. We have a facility in Bordeaux. And what's unique about Monnaie de Paris is we've been around for our 12 centuries. We are the oldest company in the world. And we are doing circulating coins. We're doing also collector coins. And we aim to launch a bullion product next year in 2026.
Well, that's fantastic. I didn't know you were launching bullion next.
Yeah, that's an idea. A lot of mints do that. And what is strange, because actually bullion was invented in France. You know where the bullion word comes from? Actually, it was the name of Mr. Bullion. Lord Bullion was Minister of Finance of Louis XIII in France. So in a way, we invented the bullion many centuries ago, but then for a reason I don't know, it was stopped in the 1930s, and we're coming back to it because there's a really very important interest around the world for investment in gold.
I can't thank you enough for joining us. I had a chance to read a little bit of your book. Would you tell us a little bit about that as well before we jump into things?
Yeah, well, the book is called The New Currency War. And I wrote this book with a friend of mine whose name is Christian de Boissieu. He used to be my teacher in economics when I was at the university, and he gave me the taste and the love for economics and for monetary affairs. And the idea behind the book is that there has always been currency wars. But in the traditional way, a currency war is a war by which a country tries to have its own currency more competitive by devaluating it. And this goes back to the 1930s and after the war. And our view is this war is still on. And maybe in a way, some people could believe and could say that President Trump has launched a new currency war when he was elected. But what we stand for is that it's not the only currency war we have now. There is a second one which will be more a sort of war between who will be the dominant currency tomorrow. It's not a question of level of the currency, devaluation or revaluation. It's a question of how important the currency is, for instance, in terms of foreign reserves holding in the world. And another new currency war, which is really very active now, it's coming, it's just the beginning of this, is a sort of war between private and public currencies in the digital world. Mm-hmm. Currency, money, is becoming more and more digital. That's a fact. It's not an opinion. But in the digital world, tomorrow you will have private issued currencies like stable coins. They exist now already. And also public issued, central bank issued currencies.
CBDCs.
It's so-called CBDCs. Mm-hmm. It's a bit technical, but you're right. It's CBDCs.
You've got the right audience here for it. Everyone is very interested in this topic. So let's jump into things with gold a little bit and kind of set the stage here. Gold's had a really phenomenal run lately. What's unusual about this is that things are going pretty well. We've got relatively low unemployment, around 4.2%, something like that. We have relatively low inflation, between 2 and 3%. GDP has been positive. We're not in a recession. So gold is normally considered to be a counter-cyclical asset. Why is gold doing so well right now? What's driving all of this?
Well, I think what you said, Brett, is completely true about gold evolution over the last year or few years. But probably you must have a more global view, not only about the US economy. And what's driving gold prices up actually is very strong. You have very strong phenomena. First of all, and it's really a long-term reason, gold could be called the ultimate safe haven asset. And this has been going on for centuries, even for millennials. Gold is very, it can be quite volatile on the short term, but people trust investment in gold. So whenever something is going bad, whenever there is a crisis, there are tensions in the world, then people, they go to gold. And you said, yes, okay, the US economy is doing quite well, but the rest of the world is not doing so well. You have a war in Europe, you have a war in Middle East, you have tension, you had a very high inflation, and sorry to say that because I'm in the US, now you have a trade war because of the US administration. So in times of crisis, people go to gold. It's a flight to quality and to stability. And this has been going on for, as I said, for centuries. And there's also I would say, a deep and long-term reason that could drive this movement of the gold prices is the fact that central banks around the world buy more and more gold. I'm sure we'll get back to this later about de-dollarization. But you see the central banks around the world, they have bought like 1,000 tons of gold a year over the last 2 to 3 years.
Yeah, a little more.
And it's really a very strong evolution. So those reasons are very strong, and they push the prices of gold up. And you have also, I would say, two other reasons that are more short-term reasons. First of all, the interest rates are going down because of the ease of monetary policy all around the world after the inflation time coming after COVID crisis. And when interest rates are going down, gold is more attractive because people move from fixed income assets like US treasuries to gold that gives no yield. No yield.
Yes.
So when interest rates go up, this is not good for gold. But when interest rates go down, and this is what's happening now, it's better for gold. And you have a very short-term reason also that we have seen over the last few months. The dollar is going down. The dollar lost something like 13% since the beginning of the year towards the euro. So, and toward the rest of the world, it's minus 8 to 10%, depending on the different currencies. So since gold is traded in US dollar, it makes gold cheaper to buy for non-US investors. So all this put together create a strong impetus for gold going up.
Okay, well, thank you. And, going back to something you said about central banks specifically and times of crisis, there was a time where central banks were net sellers of gold. And I believe it was around the 2008 financial crisis when everything kind of started to unravel at the seams and fall apart, that they said, maybe we shouldn't have sold all that gold. And they became net buyers again. And after COVID, again, they doubled down. And that's when we started seeing some of these massive purchases. And I believe they went from about 500 to roughly 1,000 or more tons, per year. So really incredible. There is a survey that goes out, I believe it's about once a year, and asks all the central bankers, why are you investing in gold? And they list about 20 different reasons. I'm not sure how many of those are truly valid. I mean, what is in your view, the reason why central banks are buying gold, and what does that really tell us about future investment there?
I think to answer this question properly, you have to ask yourself which central banks are buying gold and selling dollar. Actually, that's the fact. They're selling dollar and buying gold. And most of the central banks that do that come from emerging countries in Asia, in East Europe, in Middle East, like the People's Bank of China has been consistently buying gold for several years. And probably this has to do with the fact that those central banks want to be less invested in US dollar for different reasons: financial reason, political reason, geostrategical reasons. And hence, what is the alternative to US dollar if you want to have less US dollar in your national reserves, in your foreign reserves? Of course, you have other currencies like the euro. I'm a European citizen and I'm very much in favor of the euro. So I would like central banks to buy more euro. But the fact is, the euro is still a number two in terms of foreign reserves. It's now in terms of currencies. I'm not talking about gold. And frankly, I'm quite convinced that there is a moment for the euro now, because central banks are sort of shifting away slowly. Let's not get over the point. It's quite slow. And there's an opportunity for euro to go up. So I think the main reason behind this is that, well, it's probably the same reason as why gold prices are going up. Gold is a good investment. People trust in gold. People, I mean citizens, but also private banks and central banks. So national reserves is something you keep to ensure the stability of your own currency. So you don't want to bet it on a volatile asset. Some people would like to bet it on Bitcoin, but that wouldn't be my idea, to tell you the thing frankly. So if you want to have a little bit less of US dollar in your own national reserves, what can you do? You can go for euro, but euro is quite stable in terms of percentage of national reserves around the world. Is around 20%, or you can go for gold. So this has to do with I would say a strong tendency that some countries in the emerging world, they want to go away from the US dollar for reasons of their own.
We've definitely touched on some of those in some of our other Market Pulse episodes, and we're very clued into some of these forces. But one of the things that our audience may not fully understand is what de-dollarization truly is, why the dollar is used in trade, and how that gets around some of the limitations of trying to transact in two different currencies. Could we give a short explanation on that? And I think that's a great segue then to get into how is gold facilitating some of the de-dollarization actions that are occurring around the world.
I see. Well, the question behind your question is, how can you measure with what indicators the weight of a currency in the international monetary system or the international financial system? And the indicator that is most widely used is the share of each currency in the global foreign reserves, national reserves, or all the countries. You take all the countries in the world, the central banks of the world,
yes, and
you look at what do they hold in terms of national reserves. It's very easy to measure. You go to see their balance sheet, and of course they hold publicly available. And the share of the US dollar in the total global reserve of the world, national reserves of the central banks, is last year was 58%. And what's interesting is if you take the share of the US economy compared to the rest of the world, it's much smaller. US economy accounts for about 10% of global trade and accounts for maybe 15 to 20% of global GDP, depending on how you measure it. So it is, it's the largest economy in the world, with China being a contender. Again, it depends on how you measure it. But the share of the economy in the world, the US economy, is much smaller than the share of the dollar in international reserves. And that tells a lot about the role of a currency. And if you take other indicators like the share of the US dollar, let's say in a trade globally, it's much more important, more than 50 or 60% of global trade is accounted for in the US dollar. When you want to buy oil, the price is in US dollar. When you want to buy gold, the price is in US dollar. When a French company wants to buy oil to a German company, the price is in US dollar. It's a bit strange if you come to think about it. What does that mean? That means that the US dollar, for the time being, is the global dominant currency in the world. Mm-hmm. And it has been so since, I would say, Second World War. If you take a look back at the history of money, which is a very long history, started many millennials ago. But if you look at what happened in the 20th century and 21st century and 19th century, actually the global, the dominant currency, global dominant currency was the British pound in the 19th century. Why? Because at that time, the United Kingdom was the global leader in terms of economic weight. And then it shifted progressively during the beginning of the 20th century, the 20s, the 30s, when the US economy was going up and taking a lead on the global economy. And at the end, it was completely enshrined during the Bretton Woods Conference in 1944, when it was decided that only the US dollar could be exchanged against gold at a rate, remember this, at 35 US dollar per ounce.
Fixed rate. Yep.
Fixed rate, 35 US dollar per ounce. So the US dollar became, in maybe 20, 30, 40 years, the dominant currency of the world. And that means that people around the world, they trust the US dollar. But they trust the US dollar not only because it's a currency, it's also because it's a country, because it's a very large country, because it has a role in terms of enforcement of law and order in the world. Maybe now the current administration doesn't want to have the same role, but again, it's still something very, very powerful. So I would say it's a global situation by where you are the leading country of the world, the leading economic country of the world, and the currency you issue is actually is expected and can be bought easily all around the world.
So can I ask you a bonus question?
Sure. Go ahead.
Okay.
Shoot, as you say in Oklahoma City. Shoot.
Talked a little bit about crypto and about the digitization, tokenization of assets kind of goes along with that. Is there any room in the future of global commerce for the tokenization of gold to make it more of a currency, especially for cross-border transactions?
Really, I do not know. I want to be frank with you. I'm not sure I can ask this question because we are just at the beginning of the crypto evolution. Bitcoin has about 15 years, a little bit more than 15 years. It was created in 1909. Cryptos are gaining more and more importance. We have to recognize this. But cryptos are not currencies. They would love to be currencies. They would love to be means of payment. If you come back to the old definition of what a money is, money has three characteristics. It is a unit of account, it is a means of payment, and it is a reserve for asset. It's an asset. And it's obvious that cryptos are being used for investment reasons. It's much more difficult as long as you are talking about means of payments. This might change in the future. It has maybe started to change, especially because of the arrival of stable coins, because the main quality of currency, of money, has to be stability. Because you have to make sure that if you use money to pay for your everyday expenses, tomorrow or next week or next year, the value of the money you hold will not go down dramatically, because otherwise you lose your purchasing power. So, and the fact is, if you take the Bitcoin, if you take Ethereum, they are very volatile assets. That doesn't mean that they are not interesting. They're interesting for people who want to go into that kind of asset. But at the means of payment, it seems to be difficult. This is where the stable coins come in. And the US administration has been very keen to develop stable coin. When President Trump was elected, he decided to stop the development of the Federal Reserve about a digital dollar. He doesn't want that anymore. but the administration is trying to push for stable coins. So there can be a development in that area. But for the time being, it remains quite uncertain. This is the view of the US administration, okay? This is not at all the view in Europe. The European Central Bank doesn't want to have, for instance, stable coins in US dollar being used for payments. So the European Central Bank and the European government are pushing hard for digital currencies, the digital euro. So that would be an alternative to private currency that might be issued. So I think we're touching here something that is absolutely very important at the core of what money is. It's one of your former president, Andrew Jackson, who said back in 1835 that money is power. Money is power. And this is completely true. Money is still power. Money is part of the sovereign powers of any country. And this is why I think a lot of countries in the world, they're looking at the digital currencies. Why? Because the crypto phenomenon is here and is here to stay. People like to buy crypto more and more. In France, in my country, we have about 10% of the population who say that they have crypto. They have bought crypto. This is quite important. Mm-hmm. It's more than 1% of the population that has bought listed companies in the stock exchange. So it is very important, and it's getting more and more weight. But going from that fact to the idea that it could be tomorrow another currency, I think we're not there yet. So coming back to the question about tokenized gold, it's something people need to work on. Why not? It might be possible. But you know what's very interesting about gold, and what's been interesting about gold for centuries, for millennials, is that it's physical. People like gold because they can have it, because they trust it, because you use it for jewelry, you use it in the industry, and the tangible dimension, the fact that you can have it, you can buy it, you can wear it, you can give it to your wife, to your husband, to your partner, to your children or grandchildren, is something that is quite important. So I say the opportunities for developing crypto assets, tokenized assets, is very important. Certainly, I'm not quite sure that gold would be the best candidate to be tokenized, but I might be wrong. If you invite me in a few years' time, we'll see if I was wrong or not.
Well, it certainly would have. I think there's one other attribute to gold that would make the tokenization of it appealing to other countries, and that is it's politically neutral. So where you have the ability to weaponize currencies in some cases, as we've seen with sanctions, not passing judgment on whether that's good or bad, just stating it as a matter of fact. It's one thing that you really cannot do with gold. It's a currency that's going to transcend governments, no matter whether they're there or not. In 100 years, gold's still going to be around.
That's right. But you can also buy gold very easily on the market.
Absolutely. So let's, I know we're running close on time, and there is one, let's call it a gold myth that's been out there for some time, and it keeps popping up in our comments. I'd love to get your take on it, and it's related to Basel III regulations. There is a belief out there that Basel III is going to cause a reclassification of gold into a tier 1 liquid asset, and it will be considered like cash, and the banks will just start hoarding it. There'll be a shortage at the exchange, and the price of gold will fly through the roof. What's your take on this?
Well, that's a very technical question, but from my understanding, gold is already a tier 1 asset. That is this has been decided many years ago. That means that there is a 0% risk if you held for bank balance sheet if you hold gold. And now, is it going to become a high quality liquid asset, as you mentioned? Frankly, I do not know whether it's going to happen or not. And I would tend to believe gold doesn't need that, because gold is very liquid. We know that. We know it's stable. It's stable in the long term. It's very volatile on the short term. But if you take the long term view, it's an asset which has consistently gone up over the last decades, and it's an asset people believe in because they trust gold. So I really cannot. You should ask to the BAL. How do you say BAL in English? In French, we say BAL. BAL committee. You should ask them. It's a central banker's question. It's a question for a central banker.
Okay, thank you. Well, Marc, just one more question. As we kind of tie this all back together, we said at the beginning, gold has performed a little bit unusually in terms of its times are pretty good overall. In terms of things in the US, understand that they're not always as great globally. But it's still been a bit unusual in terms of its overall performance. How should we be viewing gold in the near term, in the midterm? How are you viewing gold in the midterm in terms of its performance, in terms of its use, in terms of how it's being accumulated?
Well, that's a question, huh? Well, if I had a...
We love strong opinions here.
Yeah. I know. If I had a precise answer to the question, I'd be a rich man, huh? Like in John Bay's song, say, I'd be a rich man today. My view is the fundamentals behind the fact that gold is going up are very strong. That doesn't mean that in the short term, if you have something happening all around the world, I don't know, gold cannot go down. Gold can go down. Mm-hmm. But I think it's fundamental. It's fundamental in terms of safe haven, in terms of trusted assets, are really very strong. So I couldn't tell you on 2025. I mean, all the forecasts out are always not realizing, because the market is taking another direction compared to the forecast that is made. The consensus, the so-called consensus. The so-called consensus is always not realized by the market. So it's a risk-free asset. It's a neutral asset from a political point of view. You said that before. I completely agree. And it's an asset that is desired for many reasons. From individuals, from citizens, but also from commercial banks and for the industry to make different objects, and also from central banks. So I would say the fundamentals are quite strong. So, but you have to see gold as a long-term investment. That is, and long-term investment is an investment in which you can go, but you have to be prepared to stay for some time.
You wouldn't recommend this as a get-rich-quick scheme then?
Get-rich-quick scheme? No. I wouldn't recommend the gold as a get-rich-quick scheme. I would recommend gold as a fundamental part of any balanced investment strategy. You have to have a share of gold in any portfolio if you are aiming at the long term. Not if you are aiming at speculation and if you are aiming at the short term. If you are aiming at speculation and the short term, then you should buy Bitcoin.
Marc, thank you so much for joining us. Really appreciate having you here.
Very welcome. Thank you so much, Brett, for having me.
Thank you for joining us on the Market Pulse podcast. If you want more content like this, please subscribe or share with a friend. Your support helps us produce new content just like this. Thanks for listening, and we'll see you next time.